Hello, and welcome back to the channel. I'm Algabot, and this is the place where we take automated trading strategies for the MetaTrader 5 platform apart and study exactly how they think. Today we're looking at an expert advisor called Dual RSI Momentum Shift. As the name suggests, its signal engine is built on two RSI lines running at different speeds, layered on top of a trend filter and a risk model that scales itself to the market. It's a trend-following, momentum continuation approach. By the end of this video, you'll understand how it reads momentum when it decides to enter and how it manages its exits. Everything here is educational information only. Let's start with the big picture. Dual RSI Momentum Shift is a trend-following momentum system. Most traders know the Relative Strength Index, or RSI, as a single line that measures the speed of recent price moves. The catch is that a single RSI line is famously noisy. It whipsaws around the 50 level when the market is choppy, and it reacts late when price reaches an extreme. This strategy takes a different route. Instead of one RSI, it runs two, computed on the very same closing prices, but with two different look-back periods. There's a fast RSI, which represents the immediate momentum of the market, and a slow RSI, which acts as the momentum baseline. When the fast line crosses above the slow line, short-term pressure has just overtaken the baseline, and momentum is shifting upward. When it crosses below, that pressure has rolled over. Turning the oscillator into a comparison between two lines filters out far more mid-range noise than simply watching one line brush a level. On top of that crossover, the strategy layers a trend filter built on an exponential moving average, or EMA. It only considers long trades when price is above a rising EMA, and short trades when price is below a falling EMA. That way, the momentum shift is treated as a continuation of an existing trend rather than a bet against a strong one. There's also a momentum zone rule that keeps entries out of already stretched, exhausted moves. Finally, risk is handled with the average true range, or ATR, which measures how much a market typically moves, so the stop distance adapts automatically to each symbol and time frame. The default playground is a liquid, trending instrument such as a major currency pair or gold on the 1-hour chart. In terms of who it's designed for, this is educational material aimed at traders who want to understand structured, rule-based momentum logic. It is not a recommendation and not financial advice. Now let's walk through the exact logic, step by step. The strategy only acts once per newly closed bar, so it ignores the noise of every incoming price change and waits for a candle to finish. On each new bar, it reads three things: the fast RSI, the slow RSI, and the trend EMA, and it compares them to their values on the previous bar so it can detect a genuine crossover between two consecutive closes. For a long setup, three independent gates must all agree. First, direction. The fast RSI must cross above the slow RSI, so momentum is shifting up. Second, regime. The closing price must be above the trend EMA, and that EMA must itself be sloping upward. This is what keeps the strategy trading with the prevailing trend rather than fading it. Third, the momentum zone. The fast RSI must be above the midline, which by default sits at 50, placing it in bullish territory, but it must also be below the maximum entry level, which defaults to 72. That upper cap is important. It keeps the strategy out of already overextended pushes where the potential reward compared to the risk has already collapsed. The idea is to join momentum as it turns, not after it has run its course. A short setup mirrors all of this exactly. The fast RSI must cross below the slow RSI, price must be below a falling EMA, and the fast RSI must be below the midline but not stretched past the mirrored lower cap. Once a valid setup appears, the strategy checks that the spread isn't too wide, then it sizes its risk using the ATR. The stop loss is placed a fixed number of ATRs away from entry, set by the multiplier, which defaults to 1.6. The take profit is then placed at a reward ratio multiple of that stop distance, defaulting to 1.7 times the risk. So if the stop is a certain distance away, the target sits farther away in the reward direction. The strategy holds only one position at a time and never stacks new entries on top of an open trade. There's also an optional feature called exit on opposite cross. When it's switched on, and the two RSI lines cross back the other way while a trade is open, the position is closed early because the momentum thesis that opened it has now flipped. When it's switched off, the trade simply runs to its stop or its target. Let's read through the actual meta-editor code on screen. At the top, we have the input parameters, the dials you can adjust in the strategy tester. FastRsiPeriod defaults to 7 and SlowRsiPeriod to 21, our fast and slow momentum lines. EmaTrendPeriod is 50 for the trend filter. Midline sits at 50 and max entry RSI at 72, defining the momentum zone. ATR-period, ATR multiple, and reward ratio set the risk model, and exit on opposite cross switches the early exit on or off. Now look at the long block. The Boolean called long OK is only true when cross up is true, meaning the fast RSI has just crossed above the slow RSI, and the fast value is above the midline but below the maximum entry level, and price is above the EMA, and EmaTrendPeriod confirms the EMA is sloping up. When all of those read true, the code reads the ask price as the entry, sets the stop loss one stop distance below it, sets the take profit at the reward ratio times that distance above it, and calls trade.buy. The short block below is the exact mirror. Short OK requires cross down, the fast value below the midline but above the mirrored lower cap, price below the EMA, and EMA falling. When that's satisfied, the stop is placed above the entry, the take profit below it, and trade.sell opens the position. Same structure, opposite direction. Let's bring the whole thing to life on this illustration. On the main panel, you can see the candles and the blue trend EMA weaving beneath and then above them. In the subpanel below sit our two RSI lines, the gold fast line and the blue slow line, with 3 dashed levels. The max entry level at 72, the midline at 50, and the mirrored short cap at 28. Watch how the two together tell the story. At the far left, the market is quiet and drifting slightly lower. Notice the fast RSI has dipped beneath the slow RSI, and it's sitting below the midline. That's soft, downward momentum, and none of the long conditions are met, so the strategy simply waits. Then, on the third candle, 3 things line up at once. The gold fast line pushes up through the blue slow line, a momentum shift upward. At the same moment, the fast RSI is above the midline of 50 but comfortably below the 72 cap, so it's in bullish territory without being overextended. And on price, this candle closes above the EMA, which has just started sloping upward. All 3 gates agree, and the buy entry marker appears. The stop is placed a set ATR distance below entry, and the take profit is set farther above at the reward ratio of 1.7 times that risk. Now follow the next few candles. Price climbs steadily, one higher close after another, riding above the rising EMA, while the fast RSI leads the slow line upward. This is exactly the continuation the strategy was designed to join. By the 6th candle, price reaches the take profit target, and the long trade is booked as a win in this illustration. Notice the strategy never chased the very top of the move, because the entry was taken as momentum turned up, not after it had already stretched. After that, the picture changes. Price stalls near its highs, and the candles lose their push. Watch the subpanel closely. The gold fast line rolls over and starts falling back toward the slow line. Around the 11th candle, the momentum shift completes to the downside. The fast RSI crosses below the slow RSI, and it's now beneath the midline of 50, but still above the 28 short cap, so we're in bearish territory without being overextended. On price, this candle has closed below the EMA, and the EMA itself has turned down and is sloping lower. Every short condition mirrors the long ones, so the sell entry marker appears. This time the stop sits above the entry and the take profit sits below it, again at the reward ratio distance. From there, price works its way down through consecutive lower closes, staying below the falling EMA, until it reaches the short take profit target on the 13th candle. That completes both sides of the strategy's behavior. What I'd like you to take from this walkthrough is the discipline in the sequence. In both trades, the crossover alone was never enough. It was the crossover, plus the trend of the EMA, plus a momentum reading that was engaged but not exhausted, that defined a valid setup. Remove any one of those gates, and you'd be taking far more of the noisy signals this construction is designed to filter out. And of course, in live markets, not every setup reaches its target. Losing trades happen, which is why the fixed ATR stop and the one position at a time rule are part of the design. So there we have it. Today we broke down Dual RSI Momentum Shift, a trend-following momentum strategy that builds its signal from a fast RSI, crossing a slow RSI, confirms it with the direction and slope of a trend EMA, filters out overextended entries with a momentum zone rule, and manages every trade with an ATR-scaled stop and a reward ratio take profit. We walked through the logic, read the actual meta-editor code for both the long and short sides, and stepped through a full example on the chart. Remember, everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. If you found this useful, please like the video, subscribe for more MT5 strategy analyses, and leave a comment with the strategy you'd like us to examine next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.